Hi, today's December 4th, 2013. You're looking at a 4-tick range bar in the forward E-mini S&P 500 futures contract on a NinjaTrader chart with a bunch of Skeeto data on top of it. And I put together this video because I talked to quite a few traders today. I got calls from many traders today who said, what the heck happened? And let's just go through the tape. I just want to do a quick tape reading lesson, an order flow lesson, and see what happened on the tape and see if that lines up with what we saw happen in price action. So I put a line here at 1786 because I know a lot of people were trading the 1786 number for support. We did have a couple of bounces off of that from the overnights, some activity around here. Here at the bottom, we saw a bunch of sell programs waning coming in. We saw some sell surges, a real competition of the bots in here. Sell programs waning right at this 86 level, and then a bunch of buying. You can see we had a tape imbalance. And what I'm doing is I'm going to move some of these order flow events because it was just so busy. They're stepping all each other. We had high frequency trading buy surge right after the bounce, a strong tape imbalance, green means to the buy side, a tape imbalance, a red sell surge, and then it was off to the races. Now, one thing to note on this whole march up, after it bounces off the 86 and you have this complete march up, this is fantastic to me as a tape reader. And look at this delta, this gap between retail and institutional. The entire march up, retail, which is the white line, is below the green red line, which is institutional. So this whole time up, retail is lagging. So the inference here is that if you're in this trade and it is marching up and you are long, that you're safe to stay long because retail's got it wrong. And you'll see the cross kind of come around here. Retail stays. Retail doesn't really cross over back above institutional till here when you're in the sell zone. And I'll highlight that just so you can see that. And you'll see, boom, retail crosses over here. Becomes more bullish because they're above institutional and you're in a sell zone. That's really you wanted to be positioning today for the down move. Behind here, I'll move this. So you can see it was a tape meter, tick surge, and you're up. Strong tape imbalance, the price moved up and it just marched up here. More buying into the high, buy program started to wane, and the selling came in. Selling came in just before it hit that 1800 number, and you'll see anything in red is essentially bot or algorithmic selling. Anything in white tends to be kind of neutral. We saw, if you'll notice right here at the high, the offers were replenished in the order book, and when we say offers replenished, we mean that the offers are frequently replenished in the book, but this particular algorithm, offers replenished, tells you that the rate and frequency and the footprints of these offers being replenished in the book is similar to prior market turns. We see that happen right at the top. A lower high is put in and we see just a bunch of bots selling. We see a strong tape imbalance, another high frequency trade sell surge. Market price though is still kind of sideways, and then the sell-off begins. So we don't see a lot of activity in MacDaddy selling yet. We see a little sell surge, some tape imbalance, the sell programs wane a little bit, and the market goes sideways. We do see a yellow tape meter ball right above price right here, and the price moves down. Sell surges kick in and price it down. And this is where tape reading and having just a feel for the tape is very important, because you're seeing lower low in MacDaddy and a lower low in MacDaddy, and you're going to expect price to follow. And then we have this beautiful war just above the 1776 number. And let me blow this up so we can really see what's going on here, because to me this is unbelievably fascinating. This one price point, a lot happened. I'm going to move everything so we can see everything all at once. This will just take a moment. I see buying and selling all over the place. Just a war of the bots in here. Sometimes the bots are confluent. I don't know if that's a word. Sometimes they're fighting each other, but a lot of stuff is going on here. This is coming into that 1786 number where I have this orange horizontal line, but just a magnificent amount of craziness. I don't know when the last time I saw this much craziness on one bar, but a lot. Price continues to march down. The digital filters are both sloping downward. We hit the 86 number, and let's look at what happens down here at MacDaddy. Boom, a lower low right here. Coming into 86, continued deep selling in MacDaddy, and we don't think that this should be the bottom. This is really piercing this support level. This is what's going to sell through and create the free fall. Right after the breach, you see another high frequency trading sell surge right at the breach point. Another tick ratio above, further down a strong tape imbalance, and we see now a tapering of MACD. After this crazy move down, which shook a lot of people out, we see MACD starting to taper to the sell side. And what's really interesting to me as a trader down here, we see retail kind of moving definitely above institutional, getting more bullish. Still wrong, because retail is getting bullish, but I'll put a line here so you can see. Bottom's not put until here. When the bottom gets put in, which we know by the end of the day it's the bottom, but in real time you have to be very cautious. Are there hints in the tape that tell us, gosh, that there's a lot going on here we need to know about? You'll see here there was a tape imbalance to the green. That means the buy-sell ratio, the tape itself, there's an imbalance to the buy side. And just as we saw a high before where the offers were replenished, we see here right at the low, the bids were replenished. So again, we know that the bids are always being replenished in the book, but what we see here is that the bids are being replenished at a rate, a frequency, and a footprint that are frequent with prior market turns. We see here, I don't know if you can see it because it's hidden by the sell program's waning, another tick ratio, but the tick ratio is below, so that's bullish, and you're up. Now, as far as tape reading goes, what we see here on MACD is we see this constant pulsing of buying, nice and steady. That is a good marker after you see a low. That means that there's steady buying coming in, and the market moves a little bit up and then a little sideways, but the bots continue to buy. So let me show you that. You see a strong tape imbalance. These sell program waning that were in here started to wane. The buy program started to wane. You have a tick ratio. But as a tape reader, let me show you what's super duper important is we see right here, right after this point here, this horizontal point, and I know I'm going quick to cover a lot of information. Right here at the tape imbalance, that's when retail starts to get more bearish than institutional. See, institutional is above the white line. The white line is retail, and retail stays bearish below institutional all through this magnificent move up. So that's a quick and dirty tape reading lesson, or modern 21st century tape reading lesson. I hope you enjoyed that.
Skido's advanced algorithmic order flow data is now available within TradeStation, NinjaTrader, Multicharts, and Sierra Chart. For more information, please visit www.skido.com. This is Cuerva from Skido. Happy trading!